I've tuned in to Buy Now, Sell Now on ET Now. This is Mansi Dave, and with me is my colleague from Delhi studio, Kanishka Sarkar. And viewers, we are celebrating ET Now's 16th anniversary celebration. And the channel has always given its best to encourage investment across asset classes by giving you all the important updates. We are pleased by the continued love and positive response we have always got from our viewers. Moving ahead, talking about the markets too are showing signs of great cheer, just like ET Now's anniversary celebration, 25,000 at present, as we see a good whopping uptrend of around 500 points in Nifty. At the same time, Bank Nifty too, both benchmarks as well as broader markets are showing good signs. And of course, the markets opened on a positive note, even when there are geopolitical uncertainties, escalating Middle East tensions and major ego clashes between the supremes of Iran, Israel and Donald Trump. A lot of geopolitical concerns, global face-off which the markets are digesting, but a mature behavior from the market. 56,090 on Bank Nifty, 25,000, about 25,000 mark, which we all were talking about on a Friday session. We see this around 200 points gains in Nifty, as well as around 500 points gain in Bank Nifty. The Bank Nifty is clearly outperforming Nifty, and the benchmarks are clearly outperforming the broader markets at present. Indian markets handle the situation with absolute maturity. As we see, there's a lot of global uncertainty, but still the markets are showing good signs of an up move on a Friday session. Rising crude oil prices impact economic stability across the globe, which is one of the concerns which we all need to consider. Talking levels, Nifty did open at 24,787, but at present we are trading around 25,000 with around 150-200 points of gains, 0.5% to 1% percentage-wise, and 200% point-wise gains. As we see, all the major sectors are trading in green. Top early sectoral gainer is Nifty PSU Bank, led by Union Bank, Nifty Realty Index, Nifty IT, FMCG, Auto, Pharma. All the sectors you'll see good signs of green. Clearly, the major contributors at present are Bharti Airtel, ICICI Bank, HDFC Bank, Reliance and Mahindra. And on the flip side, if we see Bajaj Auto, Infosys, Hero MotoCorp, Maruti and Britannia are the major laggards in the market at present. But Kanishka, clearly the markets are also enjoying and celebrating like we are celebrating.
Well, absolutely. And I also can't help but notice that we're almost winning today. And on ET Now's anniversary. But let's get going. Now we have Kunal Bothra who's joining us now to help us understand what the market is looking like now, and also to answer all our stock related queries when as and when the viewers keep sending them to us. Now Kunal, I remember just yesterday you were mentioning how recently we have seen about 28 sessions of consolidation, and now we are finally past that 25,000 mark. So from here on, where are we headed?
Good morning, Kanishka, Mansi, as well as all the viewers, and congratulations to ET Now for the 16th birthday and anniversary. I would believe there should be many more decades of such celebrations to come on the markets, and I think the markets are also rejoicing this kind of a fantastic day. I would say it's a fantastic reversal for the markets from a freaky Friday last week towards a fantastic Friday closing, which we are heading towards. The Nifty back again to that 25,000 mark. It shows a lot of maturity from the market perspective. The way many of the geopolitical news flows have turned out, they have kept the markets on edge. But then our markets have made a very strong comeback. And to be trading at 25,000 mark, just 500 or a 600 point consolidation for the last 29 trading sessions as such, indicates that our markets have taken all of this news flow. In this last 28-29 days, we've seen RBI policy, we've seen the effect of the geopolitical tension, crude oil prices rising from $60 on Brent to 78, 79 yesterday. So I think we've absorbed all of that news flow for the markets and still shown signs of good solidity. I believe that that's a winning effect of our markets and a maturity the markets have shown. My sense is that going forward, we are now looking at a potential breakout of this major consolidation the index has been trading towards, and then a potential rally towards 25,500 to even 26,000 mark, which may see over the next 3 to 4 weeks.
All right, Kunal, that was a great one. From a freaky Friday to a fantastic one. Yes, last Friday session, there were a lot of volatile moves in the market, but at present, if you see, there are signs of all green. Moving ahead, let's move and let's start taking all your stock-related queries on the show. But before we move there, a note that you can connect with us on the WhatsApp number, which are flashing on your screen. Mention the name of the stock, the company, the price at which you're holding, and the holding time horizon which you consider, and we will try to take all your queries and get answers to all your stock market related queries. There are a lot of queries already flowing in, and let's start with the first question. Rohit Srivastava writes to us from Prayagraj, Uttar Pradesh. His question is on Mazagon Dock Shipbuilders. He's got 900 shares at 3150 apiece, and the question is whether he can maintain the positions intact for another 6 months. Is there more further upside visible in the stock? Now, Kunal, talking about shipbuilding as well as defense, this has been a space which has been in flavor since a good long time, and the government is also doing big for the development of this entire sector. Mazagon Dock, if we see in the last 3 months itself, the stock has seen around 25% of upsurge. What's your view for the viewer?
See, I think, as of now, I would suggest to hold on to the position. My only concern is that there will be a phase where many of the defense and the shipbuilders name, these stocks would go into a correction. That should happen at least in the next 1 to 3 months. I'm not sure whether the rally would start off first and then a correction. But then I think eventually these stocks have to go into a near-term correction. I think that's why you're seeing there's a phase of a pause for many of the defense shipbuilder stocks in the last 1 to 2 weeks, where you're seeing many of these stocks just slightly ebbing off from their previous major swing highs. That should actually result into maybe a minor correction as such in the next 3 to 4 weeks. So there would be a phase where you might see that coming back into stocks like Mazagon Dock also. But I would suggest that if that phase comes and if you continue to hold on to the stock, you should look to add further quantity, because what we are looking out for a phase is that these stocks have gone through a very sharp trending breakout, and in a trending breakout, any major retracements which comes along should be taken as a buying opportunity or a zone where you can look to accumulate further. So that's my view on Mazagon Dock. Bullish on the longer term play, but maybe slight bit of a corrective phase in the near term is what you may witness.
All right, that's the view coming in on Mazagon Dock. But moving on, we are also joined by Ajit Mishra, the SVP Research at Religare Broking. Both Kunal and Ajit will help us answer all your queries when it comes to stocks. Now, Kunal, now coming to you. We have a viewer who's holding shares of Canara Bank. Her average price is 116 rupees. So she wants to know if she should average out at this time, or should she continue to hold, and what's the target for the short term?
Dividend of 4 or 5 rupees approximately per share. So I'm not sure whether your price is adjusted to that. But irrespective, I think at current levels of 105, 6 or 6, 7 where the stock is trading right now, I think it's a good zone where you should look to average further. It's a top quality name. The stock has done reasonably well from the March 2025 bottoms. I remember I think the stock was almost at 82 or 83 rupees price adjusted, in terms of the support. And from there, the stock has moved more than 20-25% to move up to that 115-120 range. So I think Canara Bank is a fantastic chart from the PSU banking name. If you're holding on to it with a time frame of medium to long term also, very good time for you to average.
Okay, very good time for you to average. Banks and financials already in flavor, and Canara Bank almost showing signs of around 3% gains in the trading session today. Let's welcome Ajit Mishra, SVP Research Religare Broking, on the panel as well. Ajit, good morning. Thank you so much for giving your time to ET Now. And as we speak, Nifty has crossed 25,000 level, and Bank Nifty is trading above 56,000. Good Friday session as we see. What's your stance on the index at present?
Yeah, good morning, Mansi. So yes, Mansi, so if you recall that the last 2 weeks, Fridays are very important. Means 2 weeks ago on Friday, the RBI announced measures related to the rate cuts and CRR cut. So that pushed the markets higher. But last Friday, it was almost the reverse to what we saw. Again, it's a trending day today, and we hope that it holds. Means we are crossing 25,000 barrier once again. So as of now, it seems like that the consolidation is still on when it comes to the index, because broadly, if you see that 25,200, 24,500 is something that Nifty has been hovering in for the last 5 weeks. And banking, which was earlier acting as a key support, has also turned sideways now. So means 56,000 was the critical hurdle, and now since we are holding and surpassing that zone, definitely there is a possibility that market may continue to see further positive momentum. But having said that, one should wait and see how situation pans out on the closing basis, and let's say 25,200. That's basically a critical juncture to break and sustain. Then we'll have the next directional move, which could help the index to inch toward 25,600 to 25,800.
All right, thank you, Ajit, for that view. Now, talking about the stocks that our viewers have raised queries about. Now, Ashish Bhushan, he's written to us from Gurgaon. He has 6,000 shares of Union Bank at a price of 121. So, if you could help us understand, his time horizon is 6 to 12 months. He wants to know what is the possible target going forward.
Yeah, certainly. So, the PSU basket, especially if you see the last leg of the recovery or, surge in the banking space, PSU were among the top performers, especially the stock like Union Bank, Bank of Baroda, Indian Bank, they were leading from the front. So Union Bank, after retesting its previous swing highs around 160-62 area, we have seen a marginal drift, but still holding above its short-term averages, which indicates that momentum is still intact. So definitely he should stay put. Now 125 to 130 is a zone basically where we have multiple supports. So with a time horizon of let's say 6 months, one can wait for 130 as a closing stop loss, and positionally he can wait for 195 to 210 as a positional target area.
On a positional basis, 195 is the first target and the second would be 210, and the stock is trading at days high with a 4% upsurge at present around 145. Moving on to the next question, and a lot of best wishes flowing in for ET Now, and one such from our viewer. The viewer writes, "Good morning, ET Now team, and happy 16th birthday anniversary." Thank you so much, viewer. The question is for you, Kunal. He would like to know 3 to 4 stocks for 4 years time perspective, can say till 20th birthday of ET Now. So clearly, of course, it is an investment based call which the viewer is asking. But at present, if we see, there are a lot of sectors and literally sectoral churning happening every single day. Considering that, it is very tricky if one needs to have a time horizon of 3 to 4 year long-term perspective. Which are the sectors which are on your radar, Kunal?
See, the viewer is smart. He asked the easier question to you and then the difficult one to me. But then I think just about, as rightly you mentioned, Mansi, that there is a very different kind of a stance which can happen over the next 3 to 4 years. But then I think, few of the names which I believe could probably become part of your core portfolios, or maybe from the large cap and mid cap end. I think something like, for example, Bharti Airtel and M&M, they are the top 2 names, which have done exceptionally well over the last 3 to 4 years. The best part about both of these charts is that even in this last 9-10 months of the price correction which we've seen in the second half of 2024, these stocks, they managed to remain into a very solid kind of a range. Managed to hold on to their respective longer term averages, and when the time came for the stocks to recover or for the markets to recover, these were one of the first few names which actually came back closer to their previous 52-week highs or lifetime high levels, as the case would be. So they could become part of your core portfolios. You might look at some mid cap names, something, for example, I've been highlighting over the last few weeks and months. AB Capital from the mid cap end, something which looks attractive. You can look at LNT Finance. That's a chart which is brewing up very well, closer to that 190 plus mark where the stock is trading right now. So like this, I think you can just about try and handpick a mix of large caps and mid caps.
All right, those are the large caps and mid caps mix that Kunal has picked out for us. But moving on now, Ajit, coming to you, we have a viewer, S. Kumar, writing to us from Chennai. They would like to know your perspective on HDFC Bank. Or if you could also give us a target for the next 6 months. They've been holding 100 shares for the last 10 years.
Okay, so that's great. Means, if you talk about the private banking majors, of late we were seeing underperformance in some of these names. But talk about HDFC Bank. It's been a consistent performer since has been holding for 10 years. So I hope that he's planning to maintain this ahead also. Uh, it's been almost like 5 years of consolidation. Though the stock is trading at the record highs, but if you see that from 2021 highs in the month of December to till date, we have not seen any meaningful returns. So we believe that this kind of underperformance is over, and usually we see that this stock after such a prolonged consolidation phase witnesses the next leg of the up move. So after this pause, we believe that probably 2300, 2400 is something that the stock might test in the next leg of the up move. Now this 1700 to 1800 is a very strong base for this stock. So definitely you should stay put, and one can in fact add more at current levels.
Consider adding more of HDFC Bank at current levels. Steady margins and asset quality as well as loan growth scenarios are something which one should keep an eye on when we talk about banks and financials, and in particular majors like HDFC Bank. On this note, we slip into a short break. While we come back, we'll continue taking the questions. So stay tuned.
And Mansi Dave, where we are answering, where our experts are answering all your stock related queries. Do keep sharing them on the number that will flash on your screen shortly. But let's get going with the queries. Now, Ajit, coming to you, we have a viewer, Jayesh, who's written to us from Mumbai. They want to know if they should continue to add more shares of NTPC. They currently have 500 shares, or should they average out at this point?
So Kanishka, they should wait, because if you see that it's been almost a month now that the stock has been underperforming, means the kind of price pressure that we are seeing, the stock is trading below all the major averages. So if the view is, let's say, short term, definitely it's not a good time. You should wait for a decisive breakup of 350 mark that coincides with the long-term averages. So once we see that, then probably we can see the fresh momentum, which could help the stock to inch towards previous swing high, that is around 375, 380 area. So if the view is short-term, definitely you should avoid.
Well, the view is short-term, you can consider avoiding, but on a long-term or a positional basis, consider waiting because the stock has seen an underperformance of almost a month, and so we can see an upside or a momentum at least in the stock. The next question is from Satya Veni. He writes to us. He requires technical advice on two shares. One is LNT, where he has got 300 stocks at 3880 a piece, and Persistent System is another stock where he's got 90 quantities at 5980 each. Kunal, I'll take this question to you because he says he's a great fan of yours, and he's considering a technical short-term perspective for both the stocks. Now, if we have a look at Persistent, the last 3 months have been really good for Persistent System, where we have seen persistent gains of around 13 to 15%, and LNT, of course, is another counter, which is a larger stock in itself. If we take a look at the analyst rating, it's always an outperform rating, and the stock is really trading in the range of 3614 to 3963 levels.
Absolutely, yes, Mansi, thank you so much for that. So now, in terms of both of these stocks, I'll start off with, in fact, LNT, because I think LNT is something which has to become part of your core portfolio. The stock has recovered very well in this last 2-3 months. I remember, I think, from the point when the results or the news flow had come out for LNT post that, the stock has moved from 3,000, 3,100 levels to now 3,400 plus, where it's trading right now. So it's been a fantastic uptrend. The stock has been very sturdy, and I would believe that with this golden crossover, which is impending for LNT, the stock would probably do much better, in the near to medium term also. So if you've bought, at slightly lower levels from the current market price, I would suggest to hold on to LNT with a potential near-term target of 3850 to even 4,000 plus, which could be possible for the stock in the next few months or so. For Persistent, yes, I would agree that the stock has done exceptionally well. In fact, there was a phase where the mid-cap IT stocks had fallen down very sharply from their December 2024 highs. Persistent was one of them, but then the way the stock has managed to make a comeback from its lows of 4,200 thereabouts, I think is quite commendable. I think at current levels, you can continue to hold on. I've been flagging off my view for the IT index that we are looking at a point where the IT index should make a very strong comeback for itself. And I think if that happens, you might expect the mid-cap IT stocks to outperform, and in that case, maybe Persistent could be one of them.
All right, that's Kunal's view on LNT, Persistent Systems, and also the entire Nifty IT index. But moving on now, Ajit, I'll come to you. We have a viewer, Nikhil Sharma, who's written to us from Mumbai. He says he's an intraday trader and also a short-term and long-term investor. Now he has 100 shares of ITC Hotels at a price of 216, with a target that he's predicting at 237 rupees. Currently, he's in loss. He wants to know when would be the right time to exit the stock, or is it better to hold on, or will it be worth buying again, or should he shift to Indian Hotels?
Right. So multiple queries. So first, let's see how ITC Hotel is positioned. So we have very limited data because it's a recent listing, and but as per the available information, it shows that the trend is positive. There is no doubt about it. It's just that after this recent up move, we are seeing consolidation for almost a month now. So broadly, the range is 205 to 220 on the closing basis. So in my opinion, he should definitely stick to his existing position because we are very closer to the lower band. 204, 205 is the support area. So with that as a stop loss, if the view is short term, definitely he should stay put. Is Indian Hotel better than ITC at current levels? I feel that as of now, both are indicating consolidation. So for Indian Hotel, one should wait for a close above, let's say, 785 to 790 on the closing basis. So in case if it manages to cross that and ITC remains the place where it is, definitely you can stay, switch to Indian Hotel, but otherwise you can stay put with ITC.
Stay put with ITC is what the view is coming in. Now, coming on to the next question, Rishabh writes to us from Mumbai. His question is on IRFC. He has got 700 shares at 191 a piece. And if we talk about the railway counters, Ajit, I'd take this question again from you. Despite larger order books, we have seen railway stocks not showing real good momentum, and particularly if we talk about IRFC, in the past few days, as we see, the stock at present is trading as around 135 with a 4.5% upsurge, but 150 seems to be a stiff resistance which the stock faces. What's your view?
So Mansi, that's right. In fact, if you see that we were seeing a kind of a thematic move of late, wherein first we saw that the defense counter started doing well. Then the move cascaded to the PSU banks and the railways counter. While the momentum continued in the latter part, railways, again, they are slightly on the back foot. And in fact, the stocks which are in the F&O basket, they are witnessing, in fact, more pressure on the higher levels. Or I would rather say it's underperformance that they are currently facing. So for IRFC also, after the reclaiming its major averages, again we are seeing that the stock is witnessing pressure and trading below its short to medium term averages also. So it's likely to consolidate in a range. So in the near term, possibility of further consolidation in the range of 130 to 150 seems high. Since we are very closer to the lower band, and in case if he has existing position, he can maintain with 130 as a stop loss and use recovery to reduce its position around 145 to 150 levels.
Those are the levels to track for IRFC. Thank you, Ajit, for that view. Now, Kunal, coming to you. The viewer SK Saran, who's written to us from Bangalore, he wants your long-term view on Scient and also wants to know if it's the fair price to purchase for a fresh entry into the stock.
I think it's a good price where you can look to start entering to the stock price. The current levels of 1300 thereabouts is a 50-day moving average support for Scient. The second reason for that is also that the stock has come back into a mild corrective or a consolidative phase, and it's now at the lower end. So the risk reward is also fairly attractive. And then the third, the most important one is that it's a cyclical turn which could happen for many of these mid-cap counters, where eventually once these mid-cap names end their correction, you would see the money flowing back into these sectors or these indices specifically. So I think in that aspect, you might probably expect Scient to do pretty well going forward. The first initial move, I would believe, should be a little bit more slow, gradual for the stock price. But then once the stock scales above levels of 1400, 1450 mark, which is the immediate resistance, that's where I would believe momentum should come back again for Scient. So at current levels of 1300, it's a very attractive risk reward buy. I would suggest a go ahead for Scient.
Okay, consider going ahead for Scient, and if you have existing position, consider maintaining it. The stock has constantly reduced debt and has been maintaining a healthy dividend payout ratio as well. So a good mid-cap player in itself. Another question coming in from Jai Lakshmi. They're writing from Hyderabad. Ajit, I'll take this question from you. Asian Paints is the stock which the viewer is holding 35 shares at 3,000 apiece. And the question is whether one should consider holding it, averaging it, or exiting the stock. Now, talking about Asian Paints and particularly paint stocks, of course, the crude-related factor is also playing, and in particular for Asian Paints, the stock has been underperforming for quite some time. Even today, if we see 2277 is the level, in the range of around 2263 to around 2800 is what the range this stock keeps on chasing. What's your view?
Right, Mansi. In fact, if you see that, from the 2021 highs to till date, means there was a broader range, 2600, 3400, followed by a breakdown, in the month of November 2024. And since then, we are seeing that the stock has been struggling to cross even its short-term averages. So we believe that this kind of price pattern usually attracts, prolonged underperformance, and that is what we are seeing within the sector. Also means of late we were seeing that Berger Paint was doing well, while the Asian Paint was still struggling for any meaningful comeback. Currently, the stock is trading closer to its previous swing lows. So the downside also seems capped if the view is, let's say, for short term. But since she has been holding it from roughly around 3,000 levels, I doubt that we can see such meaningful recovery, at least in the near future, or maybe in short to medium term also. So the good idea is to take the losses and switch to the sectors and themes which are doing well. So probably private banking majors like HDFC is something that she can consider, or Axis Bank, or maybe LNT, from the large cap basket.
All right, thank you, Ajit, for that view on Asian Paints. But with that, it's time to take a very short break. Thank you so much, Kunal and Ajit, for joining us today and helping our viewers answering all their stock-related queries. Thank you so much for joining.